Degrees. This is on 469. You're asked to journalize all of the entries, and then close all your accounts. You have a problem on
8.
number 8.
Just give the right number for it.
Okay,
Inventory losses.
$50. Where does it come from? The inventory of supplies at year end was $5,900. So it gives you the end of year supply number. So then you have to go back and calculate what the difference is, what you used in supplies. Right? So let's go. So if you start up at the top, you start with an inventory. You start the year with an inventory of 3,000. You see that up in your book? You see that in your book, Sean? Page 469. You're given a set of starting numbers for this problem. So you start with $3,000 worth of supply inventory. Okay? Then you add in number 2 $13,000 of supply inventory. So now you have $16,000 of supply inventory. Okay? Then in transaction 6, you subtract $10,050 from your supply inventory. So now you have, what, $5,950 of supply inventory. Then in, then the problem gives you, in number 8, gives you your ending balance of supply inventory, which is $5,900. Well, if you calculated your balance to be $5,950, but the real balance is $5,900, that means you have to adjust your inventory down, which is where the credit comes in. And if you credit the supply inventory, you have to debit your inventory loss. And there is a section in your chapter that talks about physical inventory.
Can you go to the top real quick?
Yeah. Should we talk through these? Yes? No?
I think just the couple that we're calling out.
Okay. Any others then that we need to talk through?
Can I see 5?
Yes.
Okay.
Does that make sense? So the enterprise fund billed you for utilities.
I just
Bless you.
had them. I had the wording wrong.
Okay.
So
Okay. Any others? So these are your journal entries. It'll take some time, but I think if you work through them, you'll get there. If you have questions, send me an email. Okay? B just says to make the closing entries. So you have to do the calculations. Right? What was salary expense? What were all these pieces? Right? And actually most of it I think is just pulling pieces down.
It's in the book.
Right? So you made, for instance, equipment maintenance expense in number 10 was $75. So you know you have equipment maintenance expense of $75 that now you have to close. Right? And yeah, it does go through an example in the book.
You know page?
Huh?
You know page?
Well, the example is throughout.
Oh.
There are multiple pieces to it. It goes through different entries as you go through. So like there's the overhead expenses, or inventory issued is talked about on 455. There's an inventory adjustment piece. There's closing entries on page 461. Other entries in there. Okay. C asks you to prepare a post-closing trial balance. So again, you just do the calculations, right? You've closed everything to net position, all your revenue and expense. So once you close those to net position, you have your new net position number. And then anything else that was adjusted. So if cash was adjusted, which it was, in a few of the different entries, you had that in there. This is a different way of showing the same thing in essence that we did in that problem in chapter 10. Does that make sense? You made the entries. Now you're saying this is how it closes. Okay? Then letter D asks you to give a breakdown as well of net position. So you're going to have another table of net position. Okay?
How many was that just like? Is it 5? The last
It was not just like, but it was like this section is that table. So once you do this table, you have the table, copy it over.
That's what I'm trying to do.
Okay?
And it's just the liabilities, unrestricted.
You have assets and liabilities, right? And you have to figure out which goes into unrestricted net position and which one goes into net investment and capital assets. Okay?